Hello, guys. I hope you had a good weekend and you're ready for the new week of trading. We could have rather a volatile week as the news about our president, Mr. Donald Trump, coming in. I wish him, first of all, and anybody who has this horrible virus, nothing but the best and best of wishes of health and fast recovery to him and to the first lady. I definitely don't want to engage in any political debate on this podcast. That's not my goal. But I would say that anybody who has this, definitely I wish them nothing but the best, and regardless of your political views, we don't wish any harm on any other human beings. As traders, we should have very good values as human beings about our business. And having integrity in our business is obviously having, as traders, integrity in our personal life, which is really important. It's called decency. The purpose of this podcast is rather have an approach to something that I love to discuss, which is risk. Like I said, you're in the business of making decisions and managing risk. So the idea came here, last week, that our president has the coronavirus. So I'm going to talk about a few things and approaches that you can have as far as dealing with this sort of risk. So again, you have risk that is anticipated and you have risk which is not anticipated. And I would say that most risk is not anticipated. This is why the markets take a shock at times and you have sudden drops. Those are things that they never considered, or even if they considered, it was not really factored into the market. So it came to us, this news announcement that Mr. Donald Trump, our president, has coronavirus. And now the question that you have to ask yourself, okay, so what do I do? So I'm just going to walk through a number of scenarios here that potentially could apply to you. Now, I understand that even within the high risk game, it's the highest risk that there is, trading leverage products such as futures. You can have a number of people and a number of approaches. You can have people who are more risk averse, less risk averse. So it's entirely up to you to really classify where you stand in that spectrum of risk. So again, even within a certain category or an asset class of risk, you can be a player that approaches things with different aspects of risk tolerance. In any case, let me start talking about it. So one thing you can do when you're hit with risk such as this is to say, okay, I don't want to trade, right? I don't understand this risk. Maybe it's too volatile. I'm not used to this environment. I don't want to trade at all. I'll just wait for the news to come out, whether our president will be okay. Again, wish him nothing but the best. But you never know, and it might not be okay. So I don't want to engage in this sort of risk, and I'm just going to step outside, and I'm just going to wait. That's one approach, and it would come from somebody who does not like to take on risks that are not understood to him. A different approach to risk could be, okay, well, market didn't really react in a really bad way. They dropped, then they recovered, then they dropped, then they went sideways. So for me, this is a regular trading day, and I should not listen to the news at all. I don't care. It is what it is. It's just another day in the marketplace. You can have a number of factors that could come in, and maybe just like in the past, every time the market dropped, it could recover. So that could be one approach. Having said that, just remember that past performance is not indicative of future results. The third approach would be, well, this is why I trade futures. I like volatility, and I'm just going to trade the markets, but I'm going to trade them during those periods that the market is volatile, and I'm looking for this volatility. So if the market starts being volatile from the first thing in the morning, it's exactly where I want to be. And in fact, I have a higher risk tolerance. Again, I'm not talking about myself, but I'm just talking as if somebody is talking to himself. It would say, well, I have a higher risk tolerance, and I would could even potentially trade with a larger number of contracts at this point because I want to capture this volatility and uncertainty. So again, you can have the approach of do nothing. Then you can have the approach of, okay, this is just another regular day with news event, or you would say, this is not anticipated and I want to take advantage of this volatility. Now, again, I cannot say that one approach is better than the other. And really, this is the gist of maybe this podcast, is to tell you that you have to decide how you trade different risks in the marketplace. This is where you're building your character as a trader, deciding what is right for you. Now, there is neither right or wrong as far as approach. Just remember that. It's whatever makes you feel good and sleep well at night. Do not try to imitate somebody else's risk. Do not try to think of, well, what would a professional do? Irrelevant. Different professionals would also do the same thing. Some of them will step outside. Some of them say, okay, this is just not a regular day. Some would say, you know what, I want to maybe take advantage and even trade with more risk at this point and trade a larger number of contracts. Again, reminding everybody that there's a substantial risk of loss in futures trading. And if you're trading leverage products, just remember that there's enough leverage in them. If you're adding leverage on leverage, you're adding also risk on your trading. So again, everything is basically risk and reward. So now that you have all those scenarios, you have to decide, okay, maybe I'm something in between. Maybe I could trade certain day, one way, and if there's another day that trades, there's not volatility, I'm going to trade it in a different way, which is also fine. But here the key is you had the entire weekend to think. Or if you didn't, in future events, if you have the weekend when the market is not closed, is when the market is closed, is when the market is not open, that's what I meant to say, is that you have an opportunity to think of, okay, what am I going to do? What would be my strategy when the market reopens? What if it opens way lower? What if it happens way higher? Maybe, if it opens way higher, sometimes the market can do that, is to send us an initial signal which is wrong. Happens many times, so the key is not to be spontaneous, but there is a plan. What if the market opens high and maintains those highs? What if the market opens lower, goes lower, or if it goes low and then to high? Think about all those scenarios. And thinking through all those scenarios, that's how you develop a plan. And the more you do that, the more events that happen in the marketplace that are a surprise, and there's tons of surprises. There will always be surprises. It's human nature, it's economics, it's finance, it's investing. There's a lot of players. So part of trading is also analyzing surprise announcements, whether they're good or whether they're bad. And it gives you an idea to think about, okay, what am I going to do? Now, some people could have the argument that news do not matter. I'm not going to go back and forth between that and tell you which side I'm on or which side I support. To be honest with you, sometimes I don't know. Being a broker in the marketplace, it's very hard for me to ignore news, because for me the news they convey risks and things that if I potentially talk to my customers, things that I could mention. Now, just because they're in the news, it does not mean that I'm always going to take it seriously. Some risks I'm going to take more seriously than others. Although I think, if there's a spectrum of serious, I always take things seriously, so I take it back. But I will tell you that my thought is that as far as the risk on the marketplace, that's what I mean. I don't mean to dismiss any level of risk, but I don't think that some news announcements will have the same level of risk as others. That's what I really meant to say. So essentially for me, like I said, as a broker, it's very hard to ignore it. But I will tell you that the reason that some news have to be further analyzed, and maybe all the news, is because news nowadays are sensationalized. in the sense that they have to be dramatic for the TV because it attracts viewers and advertising and everything else. If it goes through the social media, everybody starts adding their own 2 cents, and it leaves you in a sense of kind of confusion. So again, if you remove all the sensation out of the marketplace and just look at the core news announcements, you look at the core risk event that came to the market that wasn't there before without going and reading everything. That's what I would do. Information helps. There are smart people out there, but I always have this fear of you guys being influenced by one good writer, right? I mean, some of them are really, really good writer and they're opinionated. But as traders, it's so important to stay objective, not to the opinion of somebody, but rather to the price action of the market. Remember, the market is always right. Now, when people say, well, if the market is always right, how will there be, buying and selling opportunities of overbought and oversold? What you have to understand, the market is always right, is that whether the market is overbought or oversold, that's the status. That would be the status. Market can be overbought for a very long time and can be oversold for a very long time. But when they say the market is right, it means that's the status of things. And if you fight those things, you're fighting an uphill battle. So it's important to also make sure that you have your own opinion about everything. Now, if you don't have an opinion, it's fine. You can take option number 1, stay aside, see what the market does, see if the volatility fits you, and then develop a plan according to that. So that's basically for now. Again, I wish our president nothing but the best and fast recovery and everybody else that could potentially get it out there. And of course, you guys stay safe. Wear a mask. It's not a big deal. It's just a piece of rubber, with it's just a piece of cloth with rubber. That's all it is, and you can save your life and others, in between. So again, think risk, right? As traders, one of the things that I love about traders and being a trader and analyzing trades is that it sips slowly into my life. And I cannot think about anything else but in terms of risk, right? And when you think in terms of risk, you say, well, as a trader, I should always emphasize risk first in my life in anything that I do. And I think potentially, it would lead to better decision making. I don't want to make you paranoid. That's not the goal, but being safe and taking precautions in life, just like taking precautions in trading, could potentially help you substantially. I hope you enjoyed this podcast. If you are looking for a broker, we would love to accommodate you. Go to www.optimusfutures.com. If you're a futures trader, I would love to help you. My staff would like to help you. We would like to earn your business. We will do everything that we possibly can to help you out in any possible way. And obviously, if there are issues that you are encountering, that you with your current situation, anything like that, we would like to address that and help you out. So again, you can reach us through phone. It's 1-800-771-6748. Also, you can call us if you are from overseas, 561-367-8686. I wish you a great week, great days ahead. I wish you safety in your trading and nothing but the best. I wish you success, and always remember that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. Trade only with your risk capital. Please don't put yourself at risk. Don't put the ones you love at risk. Just trade with capital you can afford to put at risk. And you know what? At the end of the day, it will make also better decisions. You will not be under a state of fear of losing those funds, and hopefully that would lead to better decision making. So again, wish you nothing but a great week, and I'll see you in the next podcast. Thank you.